So, in 2025, private equity giant the Carlyle Group didn't just have a good year. They had a record-breaking one. But here's the real kicker. They pulled this off while a lot of the industry was really struggling. So how on earth did they defy the odds? All right, let's dive in and break down the 3 big wins that really defined Carlyle's phenomenal year.
Okay, first, let's just try to wrap our heads around the sheer scale of this success. By the end of 2025, Carlyle was managing a staggering $477 billion in assets. I mean, that is just a massive number, and it was driven by some really strong investment performance and, a flood of new capital coming right into their funds.
And look, these aren't just abstract figures. The CEO, Harvey Schwartz, he came right out and said it himself. They significantly outperformed the targets they had set. So they didn't just meet their goals, they totally smashed them. Which leads us to the big question, how? How did they actually do it?
To really get what Carlyle accomplished, you got to understand the backdrop. I mean, this did not happen in some booming, easy market, not even close. They managed to pull all this off during a really challenging, almost hostile time for the entire private equity world.
The biggest headache for the whole industry was this thing called monetization. That's just the fancy term for cashing out of an investment, right? Usually by selling a company or taking it public. And with all the market uncertainty, deal-making just slowed to a crawl for so many firms, leaving them stuck, unable to return cash to their own investors.
And that industry-wide headache? Well, that brings us directly to Carlyle's first huge win. Because while it seemed like everyone else was stuck, unable to cash out, Carlyle, well, they found a way. They basically turned a market-wide problem into their own major success story.
And listen, this wasn't just luck. It was a totally deliberate strategy. The CEO acknowledged the industry's struggle with monetization, and then he basically drew a line in the sand, saying, Carlyle has proven to be an exception. They were actively looking for those exit ramps where everyone else just saw roadblocks. And they weren't just some small exception. They were the leaders. The proof is right here in the numbers. Since 2024, Carlyle has generated about $10 billion by taking their companies public. That's more than any other firm in the industry. This is the hard data that shows their mastery of the exit.
Now, the absolute crown jewel of their strategy was the IPO of Medline. Let's just break this down for a second. First, they invested in a rock-solid healthcare leader. The deal itself was historic, raising over $7 billion. And the result? A trifecta of records: the largest sponsor-backed IPO, the largest healthcare IPO, and the single largest IPO of the entire year. Just a true home run.
So successfully cashing out was a huge part of their 2025 story, but it was only possible because of what was happening under the hood. And this brings us to their second big win: the explosive performance of 2 specific internal growth engines that were just firing on all cylinders. So what were these 2 engines? Well, the first is Carlyle AlpInvest, which specializes in secondaries. You can think of it like a stock market for private equity. When the original investors need cash, AlpInvest steps in to buy their stakes. In a tough market, demand for that kind of liquidity just soars. The second is Global Credit, their massive lending business. When traditional banks get nervous and pull back, firms like Carlyle step in to provide that capital. Both were perfectly positioned to thrive in 2025's environment.
And just look at this growth. Fee-related earnings, which is that steady, predictable income they make just from managing assets, it's skyrocketed by nearly 60% from AlpInvest alone. And Global Credit wasn't far behind, growing by an impressive 21%. These weren't just side businesses, they were the absolute powerhouse behind Carlyle's record earnings.
A key driver of that global credit success is something called a CLO, a collateralized loan obligation. Really, all it is a package of corporate loans all bundled together and sold to investors. And in this space, Carlyle is a giant. They were the most active manager in the US, pricing a record 39 of these things in 2025 alone.
Okay, so we've got savvy exits and we've got powerful internal engines. Carlyle's third big win looks to the future. It's a major strategic pivot into the world of individual wealth. So you might be asking, why this shift? For decades, firms like Carlyle have focused almost exclusively on huge institutional clients. Pension funds, sovereign wealth funds. So why are they now turning their attention to individual, high-net-worth investors?
Well, the answer is pretty simple. It's a massive untapped market, and Carlyle isn't just dipping a toe in, they're diving in head first. They've doubled the assets in their funds for wealthy individuals, they've launched new tailored products, and get this, they grew their dedicated team by 50%. This isn't some short-term play. It's a fundamental, long-term investment in a whole new source of capital.
So, to recap, Carlyle defied a tough market by mastering the art of the exit. They fired up these powerful internal growth engines, and they made a major strategic bet on the future of wealth. It's a really powerful combination. But the big question now is, can it last?
Even Carlyle's own leadership is signaling some caution. They're flagging potential headwinds like market volatility and tighter credit, and they're acknowledging that the very conditions that helped them thrive in 2025 could become a lot more fragile going forward.
And that leaves us with the million-dollar question, right? 2025 was the year Carlyle proved it could be an exception to the rule, posting record numbers while the rest of the industry struggled. They've clearly built a powerful, diversified machine. But as markets shift once again, the real test will be whether they can continue to defy gravity in 2026.